Joining us right now to talk markets ahead of the opening bell on Wall Street is Sarat Sethi. He is managing partner and portfolio manager at DCLA. He's also a CNBC contributor. And Sarat, what did you think of the jobs number? Just kidding. Want to get you to weigh in on this big debate that everybody else was having. What do you think of the Fed's moves and what it means for the markets?
Look, I think the Fed is a little too early. I mean, everything we see is the data showing I don't think we're going back to 2%. When you look at wages, you look at input costs, commodities. I mean, it's surprising to see where energy is at $70, but all of that could change, in a nanosecond. So I do think that, the market loves the idea that rates are coming down, and maybe we get a little less certainty about that. But going forward, I mean, we're not positioning our portfolios to say, hey, rates are going down to 2%. I think you want to be in areas that have pricing that can do well in, I wouldn't say high inflation, but at least you're going to have pricing power.
Meaning that you think maybe stocks have gotten a little ahead of themselves, so you have to be a little more careful in what you're picking?
Yeah, and I think, Becky, we talked a little while ago, buying stocks that were out of favor, but also now taking some profits. Some of these stocks have run up so much, and we like them. I mean, it's not that I don't like Meta or Uber, but take some profits off them when you bought them cheaper, and then put it into areas like commodities, healthcare, energy that are cheaper, that haven't done as well, and actually have secular growth behind them. So some of those areas, it doesn't really matter what interest rates do. It's really individual company specific.
It does matter in commodities if you think inflation is going to come down or go up. If you think inflation is going up, maybe commodities is the right place to be.
Yeah, I mean, in that case, buying an Alcoa, buying a Freeport-McMoRan, those will have pricing power, especially if you get an imbalance in supply and demand. So they will have pricing, and when you have some inflationary pieces out there.
Sarat, your favorite place, let's say, for 2024, and you've only got about a minute.
I would say probably healthcare. I think there's a lot of opportunity in healthcare, whether it's in life science companies, medical products, and even big pharma, all out of favor at very reasonable valuations.